you're watching The Money Show with me, Kavita Thapliyal. Recent data filed with the BSE indicates that the proportion of mutual fund holdings in new age tech companies has jumped by 2 to 3 times in FY23. So why are mutual funds betting big on new age tech companies like Paytm, Zomato, Nykaa and others? And is the worst behind for these new age tech companies? Let's get all of this answered. I have Aditya Agarwal, co-founder of Wealthy.in with me. Aditya, good evening and welcome to the show. So there is a twist in the story for new age tech companies. What is it exactly and why are mutual funds schemes betting on these companies now?
Thank you, Kavita. Always a pleasure being on your show. Yeah, you're right. I think when some of these companies listed, a lot of institutional investors, including mutual fund companies, felt that they didn't have as much clarity on the business model. And they, at that time, some people quoted publicly as well that we feel the companies are overvalued. But if you see 15 months, as you rightly said, that from FY22 to FY23, we have seen a jump by almost, 250% in terms of how much mutual fund companies hold these new age companies. So I think a couple of things have changed. One is obviously from their IPO price to where these companies were, let's say 6 months back in terms of their share price. They had seen a lot of I would say it was a blood to an extent, but they had seen a large a discount or undercut in terms of where they got listed on price. So companies were looking attractive at that valuation. Second thing I think that happened is that since these companies like mutual fund companies, mutual fund managers rely on management meetings, management guidance, they rely on the data that is available in public domain to make the investment decisions. So if you see in last 12 to 18 months, each of these companies have had probably 3-4 quarters of results. So mutual fund companies or fund managers have had 3-4 chances of interacting with the management, and have had look at the data of what's happening in the business. So they've been able to understand the business model better, right? So I think these two things combined has probably helped mutual fund managers sort of take investment bets in these companies with much more confidence. So one is, as I said, the share prices were looking much more attractive. And second was, of course, that, there's much more information available on the business model and the prospects of the business going forward.
Exactly. I would like you to actually spell out the name of the schemes which are actually holding these companies, or maybe have a slightly increased exposure in these companies, and also what's the kind of strategy these funds are adopting, because most of the mutual funds in equity space have a strategy of buy and hold, and consider the kind of triggers and clarity that they've got from the company and from the data that's coming up. It's clear that they want to have a long-term investment, but then how exactly would that fare out, and what will be your analysis?
Right. So I think first let's look at the schemes or AMCs that have been participating in purchasing. So Motilal Oswal, there are a couple of schemes, Motilal Oswal Flexi Cap Fund and Motilal Oswal Mid Cap Fund. I think these are two schemes that have invested quite aggressively in companies like Zomato, Paytm, to extent even Nykaa, PB Fintech, right? So these two schemes for sure are probably at are leading the charts in terms of how much money they are investing in new age companies. But besides that, also there's a broad-based participation. So you have schemes from Mirai, large cap, flexi cap. You have schemes from ICICI. You have schemes from Nippon. You have schemes from Nippon, UTI, Kotak, SBI, right? So in fact, something like an SBI blue chip fund also now has an investment in Zomato, right? So this has become like a broad-based thing now. And I think the reason for that is not, all of us can guess, because if you look at some of these new age companies, right, like Zomato, Paytm, even PB Fintech to that extent, they are possible because of the penetration of internet. If there were no mobile phones and no internet, these companies probably wouldn't have existed. Because, if you imagine, let's say, building a business on just by, making 5 rupees, 10 rupees payments to a Kirana shop, you could not imagine that there's a business to be built there, right? Similarly, imagining that there will be lakhs of restaurants from which I can order, right, sitting at my home, that would not have been possible, right? So I think some of these things are structurally, these are practically new industries, right? So I think some of these mutual fund houses that now understand that what are the business models that these companies are following, they are comfortable with the management, right? So that's why I think some of these schemes have been slightly more aggressive, like Motilal schemes have been slightly more aggressive than the rest in terms of building their exposure to these companies. But yeah, as I said, now it's broad-based. So a lot of other schemes, a lot of other fund houses have also started participating in the growth. In terms of the strategy, as you rightly said, right, mutual fund managers, ideally when they invest in a company, they ideally want to sort of hold it for long term. But it's not like mutual fund companies or mutual fund houses don't sell a stock, right? So they obviously, if they feel that the business is not performing, and I think that has got nothing to do with new age or old age, right? If they feel that the business is not performing as per the expectation or as per the management guidance, right, then they obviously will take a call that we want to exit the business. So whether they hold it for really long, that is for us, all of us to see. And in fact, that is actually for businesses to sort of prove that their business is worth holding for long term. Right. But I think all of us today, even like sitting across, we can just sort of visualize that, it's very much possible that, a lot more of us will use and a lot many more times will use let's say mobile phone to make payments or to do an order from a restaurant. Whether this is the company which is listed right now will be the winner or whether it will be 3-4 other players, that is for time to prove. So I'm sure mutual fund houses will sort of look at the numbers closely, quarter on quarter, year on year of growth of these businesses, and whether they are able to achieve those numbers, and then decide whether they want to sort of hold or sort of exit these stocks.
Right. So let's just help our viewers understand, what's the takeaway for them. An investor who really wants to invest directly through stocks in these companies versus an investor who wants to go via mutual fund route. The risk mitigates if you're taking the mutual fund route, and that should be the strategy if one wants an exposure in these new age tech companies.
Yeah, I definitely, because if I'm, let's say, a retail investor, right, and I see that a lot of us essentially, for example, we use Google, we use Apple, right? So a lot of us would want to invest in those companies, right? But similarly now in India, if you're using these companies that on a day-to-day basis, right, so now we can actually own these companies and we don't need to do them directly. We can actually own them via a mutual fund, where a fund professional manager, first of all, is diversifying my money. Right? For example, today, even if I invest in a Motilal Oswal, right, flexi cap fund, it holds about 8.9% of its holdings in Zomato. Right. Now, obviously, that means that, I'm overexposed to Zomato, but it's still at just 8.9% versus me investing directly in something like Zomato. Right. So definitely mutual funds is still the route. And for a lot of young people, right, like a lot of in our office also, people who are in that, younger and sort of are the bigger users of these companies. They always wanted to own these companies, but they were sort of scared that should I invest 50,000 or 25,000 directly in the stock. So these guys can now definitely get exposure to these new age companies via mutual funds. So I think it's a big advantage for a mutual fund investor, because now they can participate not just in India's growth story, right, but they can also participate in India's growth story, which is being enabled by technology.
Sure. I think that will be all. Thank you so much, Aditya, being on the show and helping our viewers understand the mutual funds exposure increasing in new age tech companies. Thank you so much.
Thank you, Kavita. Pleasure.
We slip into a short break, but then post